Hello guys, in today's video I will be talking about 5 trading strategies, or rather 5 trading methods that you can use in swing trading. So basically we will be discussing how to navigate during the various periods of the trends. So we'll be talking about how to recognize and act during the moments of consolidation, how to recognize if it is a consolidation or a trend reversal moment, so on and so forth. So let's go and jump straight to the charts. And here we have the BTC chart, the Bitcoin chart against the US dollar. And so we will be discussing firstly the situation from the October 2021. So slightly more than a year ago, where we had the last rally on Bitcoin. So the first thing that we need to mention are, of course, trend lines. If the price is moving in a particular direction, then we can draw a trend line through along its lows. And if the trend is strong and healthy, it could, as you can see, bounce off this trend line, or at least, move slightly towards the trend line and bounce from such levels and continue rally to the upside. So the first sign that the trend might start exhausting, which means that it can be that there is not much more buying pressure, not much more buying force, not too many buyers, not too many new buyers are coming to the market. There is not enough new money pouring into this asset to push the price higher. Therefore, the consolidation the pullback or consolidation or bigger consolidation might start. So as you can see, we had this moment over here when the trend was very clear, right? We are moving, making a higher high, higher low, higher high, higher low, higher high, higher low, so on and so forth, higher high, higher low, etc. So that's the first thing. Second thing are the round levels, which, to be honest, they doesn't mean anything. The same situation was when we were entering the 21st century. Therefore, everybody was freaking out that the end of the world is, so on and so forth. But other than that, it doesn't mean nothing than just some mind shortcut that it might mean that something is more expensive or something is cheap. That's it. The same with parity level on Euro USD, the same situation. So that's the thing. So I discussed it over here. We have this $60,000 and $63,000, which you can see worked very good as a support and demand during this period. It was broken at this level at this moment, but the price quickly reversed inside the channel. Broken here again, the price again reversed, and then the trend continued. Then the trend continued. Then again, it broke into the upside, and the price movement was so strong that we made a new high. But about that in a minute. So next thing that we want to pay attention to, that we need to pay attention to also in such situations, if we see that we are on a very strong support, we are a very strong resistance level, very strong support over here, we have very strong round numbers, we made a new higher all-time high, because as you can see, this was the latest highest point, the latest all-time high, and so that means it is we can say very, very strong resistance level over here. Additional situation is when we see a divergence on the RSI indicator. So we were also discussing this many times in previous videos about this tool, this observation, and what we can see over here. Okay, so again, when we start from the bottom, now we're here. When we start from this moment, from October 2021, we see that the RSI is making higher high and higher highs, higher highs, higher low, higher highs. So basically it is the same as with the price. We have this higher point over here, higher low over here, the price going up to the upside, and the indicator also shows move to the upside, the higher high. But when we go further, we can see that the price goes much higher, but the indicator shows us different history. So we can see that from that moment, the price went parabolic to the upside, but the indicator was trying to say to us that I see that at this moment the price doesn't move as strong as it should be for the trend to sustain its movement. So we can see basically that the price moving to the upside, but the highs on the RSI are lower than this previous one. So basically it is a divergence. When the price move in the opposite direction than the indicator. So as I told, it means that the trend is exhausting and the reversal might occur very soon. So if we check the chart even further, you can see that this point over here is higher than this one when we take into account the price move, right? We can clearly see that. Let's mark it on blue. But on the RSI, it isn't. So we can see still that the divergence is, we can say, is sort of active, still relevant at this moment. So yeah, that is another indication for us that something's going on over here. Okay, next thing that we need to pay attention to is, of course, the time period at which the price is moving. So when we measure this moment over here, we can see that this upward movement lasted for 20 days. And if we check this consolidation period, we can see that it lasted 24 days, which means that it lasted more than this upward movement. So if it would be some, short pullback, short consolidation, that could signal for us the continuation, it would be much shorter than this one. So we can clearly see that, this is another point where we can see that, it might not be just a short pullback, a short consolidation. Because those moments when the consolidation lasts very long, either if it is on a higher level or a lower level, it is called accumulation or distribution. So if it is over here, it is the distribution. If it is down below, it is accumulation. What it means? It means basically that accumulation period means that the investors are most likely bigger investors are accumulating the asset at a lower price, and when the price pumps, they are distributing at least part of the bought previously assets, bought previously stocks, coins, etc. at a higher price. Therefore, it begins when this distribution is bigger than we can say than the buying pressure, than the new investors coming into market, and then the new money coming into the market, that forces the price to reverse its direction. And this happened over here, as you can see, when we broke through the 60,000 level. If we zoom in, we will see it more clearly. We went down, we retested the level, and we continue to move to the downside. Even if we wait a little bit for the second retest, we would still not be late to the party and could open a short position. So let's go back again for this accumulation distribution thing. You can see that the same thing happened over here. When we had this previous rally in the 2021, in the beginning of the 2021, when the price collapsed, you can see that this sell-off lasted for how long? 7 days. And this consolidation lasted for 67 days. So you can clearly see what I haven't mean over here. Okay, if we go and digest this example even more, you can see that, okay, the price consolidated between those levels. We broke through to the upside, but again, of course, we broke to the upside. Again, we made higher high. This is also a crucial thing. So it is a signal that, okay, maybe it is a continuation. We received on an opposite signal, which is a double top. But again, if the price move forward, we see that it retested and bounced back again. But if we check this, if we check this, we see that it is a double top, and of course we have the candlestick pattern, which is an engulfing candlestick, which means basically that it is a reversal pattern over here. And even if we would make it on a higher time frame, we'll change it to maybe daily time frame, you can see that this double top might be even over here. One top, second top, and here we have this neckline after which the trend reverses. So okay, let's get back to the 4-hour chart. Okay, so the next tool you could be using are the EMA's moving averages. These are the 150 period moving averages, a very long one, but the difference is in the calculation. These ones are not calculated based on the closing price or opening price, but the closing price, the calculation based on closing price is the most common. I was using it most often, but these are based on highs and lows. So that's the slightly difference, and we could use this price channel to act as a sort of active support and resistance. If we had this moment over here when the price turned to the downside, it became a downtrend, so it is working as a support for us. So what is also important in those moments when we have clear downtrend? Chart patterns. So if we see that the price, there was a sell-off, the price started consolidating, it went back to the channel, even slightly poked it to the other side, but we see that clearly it created a double top again. Therefore, we know that it is a reversal trend, reversal pattern. Therefore, for us, it is a signal that we can enter over here. So again, those moments when the neckline is broken, it can be a signal for us to again enter the market or to just confirm us that the direction is still to the downside. So there are situations, of course, like this one, when we see that the trend lines aren't working very well so much. So we can see it was great over here. We stopped at $33,000 and the price reversed, and right here we started this, we can say, dance when we had this three white soldiers, beautiful three white soldiers candlestick pattern, and we moved to the upside. Everything's cool, but again we went back to the channel, even broke it to the downside. There was some head and shoulders, broke the channel again and again and again and again, and therefore you can see that we should, at that stage, of course we should digest it a little bit earlier, but at that stage it is not a reliable source of information for us to be, to be using it to determine the next price move. So if we go a little bit further on the chart, we will have this situation over here where the price again fell to the 26,700 and started to consolidate, and the price at some point went into the channel. So let's check this situation. Let's zoom in and see what we've got. So in this situation, the price started bouncing off those clear support and resistance level, and those were 28,600 if we round it up. and we had 30,700. So these were, you can clearly see them, the two support and resistance level. So when we have the situation like this, what we should see is the clear moment when the price is breaking out of this channel, retesting the level, and then continue going in this particular direction of the breakout. So when we see that the price is bouncing up and down, false breakout, what we could see here is just retesting the levels of those trend lines. But yeah, the breakout was clear, but the price didn't stop at the support level, didn't retest it, and therefore we could not even look for any other continuation sign of the upward movement, because the price went straight inside the channel. Again, up and down, again breaking out of the channel, retesting those the trend line channel, and come back inside the channel. Again, break out of the channel. The price didn't stop and retested this support level, support level at this stage. It went back inside the channel. Therefore, it is a signal for us that these all were just false breakouts. And assuming that the price is making lower highs, we could think that future direction of the price is to the downside. And what happened next, of course, is this moment over here, when we broke this support level at $28,600. We went down, we went up. It was not quite the retesting of this resistance, but if we make it as a zone, we could say that this was the retest movement over here, and after that the price collapsed further. So we can see that patience is one of the virtues of the traders, and it is one of the key to success. If you will be, like your fingers will be itchy and you want to open a trade as soon as possible, therefore you will be burned many times and you will most likely destroy your account. You'll lose money immediately. So I think that will be all for this video. Thank you guys for watching. Hope you liked this one, and yeah, I see you in the next one. Take care and goodbye.